Beyond this year, could we actually see the Fed cut down to zero in this easing cycle, Yacov?
Well, I'd say seems premature for now, right? The data is softening, but we're certainly far from any sort of panic. But it is important to remember that whereas the Fed certainly has a lot more room to stimulate than other central banks, right? Rather than the ECB, rather than BOJ. That's why there have been such significant inflows into U.S. Treasuries. You have a risk-free rate where there's actually room to cut rates further in a crisis. So it's risk-free, and it's downside protection with carry. So that's why Treasuries have been so popular with investors over the past several weeks.
How much of a rebound could we see in Treasury yields if the scenario that you painted comes about, Mark? And what would that mean for equities?
So I think if we see like the strong print today, we see above 200k, I think there'll definitely be a short-term, very powerful bounce. I'm someone who believes that the kind of Treasury yields can still go lower. The Treasuries trade still has more room on a medium-term basis. And, I agree with you that there's risk-free and there's got carry in there, and there's not much yield elsewhere at the moment. But I think short-term, it's probably skewed for quite a powerful bounce. So we could see, 15, 20 basis points. And obviously that would be a real big scare for equity markets, because the big thing that's been driving equity markets higher, given the complete collapse in data elsewhere and the trade war, is the fact that they've had much lower yields, they've had a lower discount rate. So I think that today the risk reward is for a more stronger reaction on higher yields and a stronger reaction on the downside in equities.
Very briefly, Yacov, if we get the reaction that Mark talks about, would that be scary for emerging market investors?
No, I don't think so. Look, as long as the Fed is generally a neutral or dovish, we're still in a very solid place. Looking at performance of EM, it tends to be most vulnerable to actually a hiking cycle, and we've seen this in 2013, the taper tantrum. We obviously saw it last year. I think we're very far from the Fed actually really reversing its stance and becoming hawkish. So I think for now it's kind of fairly smooth sailing, and actually maybe upside for EM currencies should we see the dollar weaken towards Q3 and Q4.